Welcome back to Dropout Trades, everybody. In this video, we're going to be going over 3 options trading tips. The first one is going to be buy time with options. The second one, how much should you keep in your trading account, which means how much money you should keep in your trading account. And the third, make a trading plan. So I'm going to be breaking all of these down for you so you know how to set up your account. That's how I set mine up. Now, this is very crucial. If you're a beginner trader, these things can change it from you from non-profitable to profitable or to becoming even closer to being profitable. So you definitely want to stick around. Let's go. Let's get into it. Buying time with options. Why is that so important? So in the beginning phases of me, when I first started trading, I was just like every other person, over there thinking I'm going to make huge, fast profits and I'm going to trade 2 days out expiration, 1 day out expiration, sometimes even 5 hours or 2 hours before expiration, which is one of the biggest mistakes you can make as a beginner trader. And I'll tell you why. When you're trading 2 days, 1 day, or 0 days expiration, the options just move way too quick, and the theta decay on that, which is basically how fast your option is going to be losing its premium, which is how fast your option is going to lose its value. So if you're buying 2 days out, 3 days out, then it's going to lose a lot more value than an option that you purchased that is expiring next week, for example. Now, if you bought 0 day out, which means the option expires today at the end of the day, then your option is losing its value in the minutes or hours, which could get very dangerous and challenging for beginning traders because unless you pick the right option and the right direction and it has a sudden move to either the upside or downside, depending if you pick the call or put, then your option is most likely just going to be losing money and value due to theta decay. And that's why I always advise to pick the week out, and it's a lot safer. Now, obviously, you're going to make a little bit less money on it when it goes up, but you'll also lose less money on it, making sure that you don't lose 30 to 40 or 50%, sometimes even 100% on your option in, just 30 minutes or an hour, if you picked it that close to the end of the day. Again, that's just my personal opinion, but that's how I trade, and I hope you take this advice and it really helps your trading. Take it from somebody that's been there, tried everything, failed a million times, came back up, and after figuring it all out, that's what I figured works best. Now, once you get better, and as long as it takes you 6 months, a year, 2 years to become profitable and good and very disciplined, then you can come back to these kind of expirations, which are closer to the expiration day once you get better at that. How much money should you keep in your trading account? Now, most traders will tell you only risk 1% or 10% of your trading account and all of that. Look, the way I trade that I found the most efficient is I keep in my trading account exactly what I am willing to trade with. So, instead of, for example, having a 100K account or a 200K account and only trading with 10 to 20K of it, I found it kind of stupid. So, for example, I will only keep the 10 to 20K in my account that I will trade with. Now, just because I keep 10 to 20K in my account doesn't mean I'm risking that much on each trade. It just means there's no point to keep 100 to 200K in the account if anyways I'm only trading with 10 to 20K. What if, I have a few bad trades and my account goes from 20K to down to 10K or even less than that? And it's going to take me at least 5 days till the money settles if I transfer money back into that account. Look, if you lost half of your account or more in 2 to 3 day trades, you need to take 5 days off. That's what I think, Maybe not 5 days, but you get the point. You need to take some days off because you're in a drought and it's too much to lose in 2 to 3 day trades. The way I do it, again, if for example, I have 100,000 account, I will only keep 10 to 20,000 in that account, and that's what I'm going to be trading with. And if I have a few bad days and I'm down 5K, okay, and I only have 15,000 left, that's fine. That's what I'm going to be trading with until I get to that 20,000, basically recharge it instead of, adding more money to the account. Once I get to that 20,000, then I build back up, to start getting into profits, and that's when I would be starting to withdraw after the week, the month, however you do it. this literally changed my trading a lot, because in the beginning, let's say for example I started with, again, 100, whatever, let's just say 10,000 for example, make it reasonable. Say I started with a $10,000 account and I was supposed to trade only with 2,000. I would have a bad trade, maybe two bad trades, I'd be down $1,000, $2,000. And what do you think? I just stopped trading? No, I revenge traded, you know and then I started using that whole $10,000. And that's one of the worst things you can do as a beginner trader. Now, this is to build discipline. I already have the discipline, but I choose that it's just more efficient and easier that way. Why don't, if it's not broken, don't fix it. It just works for me. I don't need more than that 10, 20,000 to trade. So why do I need to keep 100,000 in there? Now, some traders, it works for them and they do keep it, and they only trade with 10, 20% of it. That's fine. If that works for you, great. But as a beginner, that's the best advice I can give you. Only keep in there what you're willing to trade with. Okay? And if you lost, that's fine. Then you have more to bring back into the account. I keep separate accounts. I have a separate trading account and I have a separate investment account, which is my long-term stocks that I hold and that I'm buying and investing in. Again, take the advice from somebody that's been there. I hope that helps you out. Make a trading plan. Why is that so important? Again, I'm going to go back to my past. Now, I know a lot of this is, telling you about the mistakes that I've made in my past. That's how you learn from your mistakes. Okay? Before, I used to just wake up 5-10 minutes before the markets open, brush my teeth, get on the computer, thinking that I'm going to make a lot of money, and I see something jumping up, I'm entering, I see something, dropping down, I'm entering, put. I see like a certain support or resistance that I thought at the time was right, I enter. That's called gambling. That's not trading. Okay. Now what I do, and what helped me out a lot, the night before, after the market closes, for example, say 4 o'clock, I'll go relax, enjoy my day. I usually don't trade until 4, but let's just say, for example, I'll go enjoy my day, do whatever I have to do, hang out with my friends, go to dinner. And then at night, I come back to the computer after I've taken some time off from the market, and I get in the zone. I start getting on the charts and I make my trading plan. Okay, very, very important. And then the next morning, again, I go over that trading plan to make sure, nothing's changed. I look at pre-market and the futures to make sure everything, is kind of adding up, and to see where the direction is. And that makes a huge, huge difference, instead of just, jumping straight into the water, not knowing which direction you're going to go into. Now, obviously, when the market opens, things change, but most of the time, the support, resistance levels, and the trading plans that I set up, because I set it up for both sides, if it's up or down, then I do trading plans for both sides. But obviously, as the market opens, you're going to have to tweak a little, few things here and there, but that's fine. That trading plan is still going to help you out a lot, and it's very, very important to make that trading plan. I used to always just brush it off and be like, trading plan, I'll make it when I wake up or as the market opens up. But sometimes, you get excited as a beginner trader and you're supposed to make that plan, but you're just seeing something just go up the first 5-10 minutes and you're like, oh, today's the day. Or go down and you're like, today's that day that everything is dumping. It's important. Make that trading plan. Plan out what levels you're going to be entering, plan out what levels you're going to be exiting, and plan where your stop losses should be. Alright, so I hope you liked this video and you found it helpful. Again, if you did, hit that like and subscribe button. Now, this is going to be in the next video this week. Now, since I'm back home, as you know, if you follow me on Instagram and TikTok, then you saw that I was on vacation in Greece for about 2.5 months. So I wasn't posting as much, but this week I'm going to be posting a lot more and giving a lot more tips and helpful things that help me out. So this is going to be the next video. It's going to be options trading tips number 2. This is what we're going to be going over: how to pick the right risk to reward ratio, what options to pick, and know your Greeks. Very, very important. Stay tuned. It's going to be posted in the next 1 or 2 days, most likely. I'm going to start working on it tomorrow. See you guys in the next one.